Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of September 4th. This week is a quiet week for economic data. Markets instead will be much more focused on next week's inflation data. Next week, we get CPI and PPI in the middle of the week. With all that said, though, this week, we're watching the ISM PMI Services Index, which comes out on Wednesday. So what I'll do today is discuss what this index is, what markets expect from this index, and why this month's report is so very important. So what is the ISM PMI Services Index? This is a survey of purchasing managers, and these are the business people on the front line, and they're asked a bunch of qualitative questions about their business. How are supply chains? How are prices? How's competition? How are new orders? When this index is above 50, it's expansionary. Below 50 is considered contractionary. If you look at this chart here, for example, this index has been above 50 for a very long time, but it is slowing pretty quickly. For the month of August, the consensus expects a slight slowdown from July's 52.7 down to 52.4, still above 50, but slowing a bit further. Why are they so important? Well, the ISM indices are the first look at last month's economy. So we'll get our first look at August economies, the services component, this week's report. And second of all, as you see here, the prices paid component tends to lead inflation indices. You look at this chart carefully. ISM prices paid has been falling ahead of trailing 12-month, trailing 6-month, and trailing 3-month CPI readings. So while the markets are focused on the Fed's plan on interest rates, they'll carefully watch this component to see if services inflation is slowing. As a reminder, we've talked about this before, services inflation, as you see here, remains very elevated, and this is what's bothering the Fed. Services inflation is high, goods inflation has come down pretty quickly. So this week's key takeaway, the markets are focused on what the Fed does next. Will they further raise rates or not? As a reminder, here at Cetera, we continue to feel the Fed is done, but the Fed will keep rates higher for longer. In other words, it'll take some time for the Fed to cut rates. This week, we get the ISM Services PMI, the first look at the services component of the economy. Prices paid component will be very scrutinized as it is a predictor of consumer inflation. If it's too hot, markets will worry about the Fed further raising rates. Thank you for listening. For more information, please follow us on Twitter at CeteraIM, and see you next week.